What's good, guys? Welcome back to my channel, and in today's video I want to show you a trading example according to the Monday range theory. And this model is especially good if you're working a 9 to 5 or for whatever reason you can't check the charts, and this model is perfect for you. So let's get straight into the trade example. We have here the pound yen chart, and if we start as always with the higher time frames, we define the bias. In this case, we have the daily order flow being bearish, and we have created on Monday a swing low with the Tuesday candle, and then the swing high. So our recent bearish dealing range is from here to here. Inside the dealing range, we have a daily bearish fair value gap. That's the first bearish PD array inside the dealing range. Therefore, we want to use this level as a potential key level to look for shorts. Let's go down to the H4. As you can see here, we mark out the Monday range. We have the Monday range high and we have the Monday range low. We have the initial manipulation above the Monday range high. So now let's see how price is reacting once we double sweep the Monday range high. Before we consider a Monday range play, we want to see the hourly candles closing back inside the Monday range, and also at least an hourly change in order flow. So we go to the H1, and as you can see now, price has been trading above the Monday range high, above the initial manipulation, and now we want to see if price can shift back inside the Monday range, followed by a bearish change in order flow. So the hourly candle closed back inside, which is a good sign. And for a bearish change in order flow, we want to see price closing below that bullish fair value gap, which would confirm a bearish change in order flow. We then can use this level as a level of resistance and look for sells into the Monday range lows. So step 1, bias is done. We have daily bearish order flow. We're trading into a bearish key level, and the narrative is the Monday range play, right? So we add from the price-based narrative, which is the higher time frame market maker sell model of that range here. We have the buy side and now the sell side. So we want to see continuation of that market maker sell model. And now pretty much on the H1, we want to see now price aligning again with the daily market maker sell model. And the confirmation for that would be a close below that bullish value gap. So price tapped now the fair value gap, swept that weak low inside, and let's see now if price is willing to close below. And there we go. We got the close below. So now we want to see if price offers an entry for us, which allows us to look for sells into the Monday range lows. For an entry, we also want to see a lower time frame weak high forming close to the key level, which could act as a stop run for then a continuation of price. So something like that. We form a dealing range low, we form a weak high, price ranges, sweeps that weak high into that key level, and then continues the bearish order flow. That will be the game plan for the short setup. So we have the hourly inverse fair value gap here now, and now we simply wait how price is developing. So price now formed an hourly swing low, so we now have a new hourly dealing range, swing high to swing low. We also swept the external low of that old bullish dealing range, so now we can expect a pullback into some internal liquidity to then see a continuation, just what I talked about when I was lining out the trade plan. So we have the inverse fair value gap here, and we have those two bearish hourly fair value gaps, which you can simply use as one single fair value gap. So we mark that one out, and we have this hourly swing high resting right inside that key level. So now we anticipate price to trade above and then sell off. So what do we do here? We now place a limit order above the high, and then we use the Monday high or that manipulation high as our invalidation. All right, and our take profit would be the Monday range low. Right here. So we have the Monday range low, and my entry was around about here. It was a 3-hour trade. And there you have now the swing trading setup, right? You have entry, invalidation, and take profit. So now let's see if price is giving us an entry here. And there we go. Price has been trading now into the key level, swept that high, and now we have our entry on the swing trading setup. So now if you also have the possibility to day trade, you can now also look for a lower time frame confirmation, which allows you to pyramid into the setup, so you can have two trades within the same setup. So we go down to the M15, and now we want to see if we can identify an M15 change in order flow, which would confirm a bearish continuation on pound yen. Also, the range here, we have a breakout against the order flow into a bearish key level. So this could be a lower time frame AMD, which then would result in distribution lower into the Monday range lows. So price has been trading now at the key level. You can see here how price is respecting the middle of that fair value gap and also the top of the inverse fair value gap. And now we want to see bearish displacement here. So price is retracing into this bullish M15 order block here. And now we want to see price to shift to bearish, right? So if you don't know how to define a bearish change in order flow, then watch my video on how to define order flow. But to summarize it, what you want to see now is price creating bearish PD arrays and disrespecting bullish PD arrays. So retracement into the bullish order block, and now we get a pullback, right? So for now, still bullish. And now we have the next candle closing below this up close candle, which retraced into this initial bearish order block. You can see here we have bearish order block. Price is retracing into the bearish order block and then selling off, closing below this up close candle, which confirms a new propulsion block, right? So we have a propulsion block here on the M15, and we also close below this fair value gap and below the middle of that bullish order block. So we can conclude that most likely price on the M15 is now bearish and we will see expansion lower. So remember, we have our swing trade, entry right here, and now we can add a second trade, which is a lower time frame day trade, right? And what do? We expect now the next candle to give a pullback into the propulsion block, and then we want to see the propulsion block to hold. Right? We don't want to see price disrespecting now this bearish propulsion block, and we want to see price using this propulsion block to sell off into the Monday range low. So again, we put our TP here, and as you can see, we get a 6-hour trade. And also, what we can do now on the swing trade, we can put our stops to the same level, right? Because we have found a new invalidation. So we put to the same level, and as you can see in this case, it would be even in profits. So on the next candle, we get a pullback and we get a fill of our second short entry. So now you have risk-free on this one, and the new open risk you have now you can add to this trade. So in total you have 6R here, and you have 3R from the initial trade. So in total you can make 9R while only risking 1R on this setup, right? Because on this one you are now risk free. And now we simply let the trade play out and see if price is willing to expand into the Monday lows. So now we have the daily close, and Asia session is the next high probability session for this pair, as we are having a yen pair, which is an Asian currency. So we can expect some volatility in Asia, and we see now price retracing a bit. But in Asia or London the next day, we want to see then price expanding into the Monday range lows. So Asia is about to start here. And as you can see, price is straight away displacing into the Monday range lows, and both TPs, the swing trade as well as the day trade, both hit TP, and you just booked 9R on this single setup. So yeah, if you liked this video and you learned something new, leave a like and a comment, and also if you want to join the ASEAN Capital Discord server, then you can find the link below. Signups for the next month are currently open, so if you want to see those things playing out in the live markets, then you can join the server for next month. And yeah, until then, see you in the next video.